A warm greetings to our lecturer, Dr. Zakia, and my name is Nyo Sun Yao, F1032, and my teammate is Charvin Rush, Analagi Mutia, and he's F1035. And we are given the task to present the financial analysis of the Appendix 1 from Kawan Food Industries. All right, so we move on with the table of content, which shows of 8 kinds of content that we are going to present today. As the first one will be the introduction, liquidity ratio, efficiency ratio, the leverage ratio, profitability ratio, financial ratio comparisons, and the recommendations, and lastly, the conclusion. So let's move on. Right. So we go to the introduction, which this financial analysis will be comparing for the Kawan food industry's performance for the year 2022 and year 2023 across the key of financial ratios, including the liquidity, efficiency, leverage, and profitability, as I have said just now through the table of contents. So the purpose is to evaluate the company's financial strengths and to identify the areas for improvement to support the informed decision making by the management. So all of these kinds of performance that they will analyze come through the process, which would come out for them to make a better decision or to improve what are they currently doing right now. All right, let's move on to the liquidity ratio. So as everyone can see, there is a current ratio equals to current assets divided by current liabilities. So through the 2023 and 2022, so 2023 we got 4.34, and on 2022 we got 4.36, and this shows that we have a better liquidity ratio throughout the year of 2022. So for the year 2023, the company indicates that for every 1 ringgit short term, that of Kawan food industry is 4 ringgit and 34 cents on the exact on. But for the 2022, the company indicates also for the every 1 ringgit short term debt of Kawan Food Industries, which come out with the 4.36. And towards the quick ratio, which shows that current assets after minus out the inventories and prepaid expenses will be divided with the current liabilities. So in the year of 2023, the instant ratio of 3.58 proved that the extent of liquidity for Kawan food industry had better liquid assets available to cover every 1 ringgit of short-term debt. But in 2022 of the ratio, it shows that 3.48 of the extent liquidity, which would also available to cover the 1 ringgit short-term debts. Alright, so next we move on with the efficiency of ratio. For the year of 2023, the Kawan food industry average was 98.62 days to collect debt from the debtors. In other words, the customer needs 98.62 days to settle their debts. So after the calculation of analysis in 2023, so the Kawan food industry gets around round off like 98 to 99 days to make them to have their debt back. But for 2022, the Kawan food industry have the average of 95.05 days, which means around 95 days to collect the debt from the debtors. As the inventory turnovers, it shows that Kawan food industry is 2.13 each month of the inventory stock up again for 2023. And for 2022, it will take 2.63 every month for the inventory to stock up again. And this is the efficiency ratio, which we calculated the fixed assets turnover. So in 2023, the fixed asset turnover of Kawan food industry shows that in every 1 ringgit invested on permanent asset, is it would help to generate the sales, which could reach up as 1.28 ringgit. So in year 2022, it will only reach up to 1.16, which shows that 1.16 ringgit. Where after the comparing of the efficiency ratio, 2023 have a higher kinds of rates towards um, the sales, and this could bring a very high impact towards the company to earn more or to achieve more profit. All right, let's move on to the leverage ratio, which shows the left side will be as usual as the calculations, and on the right side will be the explanation that I'll be explaining right now. So in 2023, the debt ratio shows 14.67% of Kawan Food Industries asset is covered by the debts, where in year 2022, the debt ratio shows 13.88% only. All right, so it is a very good comparison towards the assets for the shareholders or the stakeholders to view. And we move on to the equity ratio. So in year 2023, it shows that every 1 ringgit contributed by the shareholders of Kawan food industry, it will get back 17 ringgit point 19 cents as a form of debt in the company finance structures. But in year 2022, the Kawan food industry will get 16.11 cents in the form of debt of the company finance structure. So as you can see, the ratio literally went up from 16.11 cents to 17.19 cents, which shows it has a good and a very effective process. And we move on to the last one, which is the time interest earn ratio. So in the year of 2023, the ratio increases to 162.58x, meaning that Kawan food industry's ability to cover the interest expenses and became even stronger. So this suggests the higher earnings or lower interest expenses, further reducing financial risk and showing excellent debt management. But in the year of 2022, the Kawan food industries only earned 127.91 times more than its interest and expenses. It shows that the company had already a very strong ability to cover the interest. But comparing to the further year in 2023, it shows up that it increased of the ability of the ratio for the company. This is one kinds of points where the company have a um, very great risk, financial risk that they could minimize out, and then they would earn the highest profit. It's a very good. It shows a very good improvement towards the company. And next, my teammate will be explaining it out, which is Charvin Raj.
Next one is profitability ratio. The first one is gross profit margin, where in 2023 it indicates that the gross profit accumulate for Kawan food industry is 28.57% from the state. And then where in 2022, it indicates that the gross profit accumulated for the Kawan food industry is 30.24% from the sale. The second one is net profit margin, where in 2023 the margin dropped to RM 0.10 profit per 1 ringgit of the revenue, indicating a decline in profitability. This could be due to the higher operation cost, lower sales efficiency, or increased expenses. Where in 2022, this means that the every RM 1 ringgit of the revenue, Kawan food industry earn RM 0.14 in the net profit after all expenses, included tax and interest. It reflects a strong profitability and efficient cost control. Next is the return on total asset. In 2023, the Kawan food industry indicate that for every 1 ringgit investment in the asset, and it will be generate a profit has a high 6 ringgit 54 cent. In 2022, the Kawan food industry indicate that for every 1 ringgit invested in the asset, and it will be generate a profit as high as 8 ringgit 35 cents. Next is return on equity. In 2023, the Kawan food industry indicate that for every 1 ringgit investment in the equity, and it will be generate a profit as high as 7 ringgit 66 cent. In 2024, the Kawan food industry indicate that for every 1 ringgit investment in the equity, it will be generate a profit as high as 9 ringgit 70 cent. So next is the financial ratio comparison between 2022 and 2023. When it comes to liquidity ratio, on current ratio 2022 is better because they are slightly higher, indicating better ability to cover short-term liability. When it's come to quick ratio 2023 is better because higher liquidity asset without relying on inventory, showing stronger immediate liquidity. And then the next is efficiency ratio. The average collection period in 22 is better because there are shorter collection time, meaning that faster cash inflow from the customer. And then next one is inventory turnover. 2022 2023 is better because there are more efficiency in inventory management and faster stock movement in the company. The next is fixed asset turnover. Also 2023 is better because there are better use of fixed assets to generate revenue. Next is the leverage ratio. When it comes to the debt ratio, 2022 is better because they are lower, meaning that they are less reliance on debt and lower financial risk. And then next is the debt to equity ratio. 2022 also better because they are indicate more conservative financing with less debt burden. And then the times interest earned is 2023 is better because they are higher earning relative to interest expenses and showing stronger ability to cover the debt cost. So the last one is the profitability ratio, and then the gross profit margin 2022 is better because they are higher percentage of revenue remain after cost of goods sold. The next one is the net profit margin. 2022 also the better because they are more efficient at converting revenue into actual profit. And then return to the total asset also 2022 is better because asset used for more efficient to generate income. Then last one is the return on equity. 2022 also better because they are high return provided to the shareholder from their investment. Next, these are the some recommendation for the Kawan food industry to overcome their weakness. So the first one is improve profit margin by controlling operating costs. Since both the gross profit and net profit margin declined in 2023, so the management should review and control operating expenses, raw material costs, and production efficiency to result higher productivity level. productivity level. Okay, next is the recommendation for the Kawan food industry to overcome their weakness. So the first one is improve profit margin by controlling operation cost. Since both gross and net profit margin declined in 2023, so the management should review and control operating expenses, raw material cost, and production efficiency to result higher profitability levels. Second one is the speed up accounts receivable collection. The increase in average collection period from 95.05 to 98.62 days suggests that the slower customer payment. Management should tighten the credit policy or offer early payment insensitivity to improve the cash flow and reduce credit risk. The last one is optimize capital structure by reducing reliance on debt. Although the company's debt level are still low, both the debt ratio and debt to equity ratio increased in 2023, which means the management should monitor borrowing levels closely and consider using the retained earning or equity financing to avoid increasing financial risk in the future. In conclusion, we would like to tell that overall, the Kawan food industry maintained strong financial stability in both years, which on 2022 showing better profitability and lower debt risk, while on 2023 they are demonstrate improvement in asset efficiency and interest coverage. Somehow, the decline in profit margin and slower receivable collection in the 2023, which they are indicate area that require attention by the Kawan food industry. By controlling the cost improvement, credit management, and optimizing capital structure, the company can enhance its financial performance and sustain long-term growth in the industry. That's all from us. Thank you for watching.